Hey everyone, welcome back. Today I'm going to break down one of the most important standards in accounting, IFRS 15. IFRS 15 deals with revenue from contracts with customers. It's crucial because it establishes the principles for reporting useful information about the nature, amount, timing, and uncertainty of revenue and cash flows. So, let's dive right in. IFRS 15 outlines a 5-step model to recognize revenue. Step 1. Identify the contract with a customer. A contract is an agreement between two or more parties that creates enforceable rights and obligations. This step is straightforward. You need to make sure there is a legitimate agreement. Step 2. Identify the performance obligations in the contract. Performance obligations are promises in a contract to transfer distinct goods or services. Think of it as what you're actually going to deliver to your customer. Step 3. Determine the transaction price. This is the amount of consideration you expect to be entitled to in exchange for transferring goods or services. Here, you'll need to consider factors like variable consideration, significant financing components, and non-cash consideration. Step 4. Allocate the transaction price to the performance obligations in the contract. This means you need to distribute the transaction price to each performance obligation based on their relative standalone selling prices. Step 5. Recognize revenue when, or as, the entity satisfies a performance obligation. Revenue is recognized when control of the promised goods or services is transferred to the customer. This can be over time or at a point in time. To give you a quick example, let's say you run a software company. You sign a contract to deliver a software license and provide 1 year of technical support. Your performance obligations are the software license and the technical support. You determine the transaction price to be $1,200. $1,000 for the license and $200 for support. You then allocate these amounts to the performance obligations. Revenue from the software license would be recognized when the customer gets the license, while revenue from support is recognized over the year as you provide the service. And there you have it. 5 steps to recognize revenue under IFRS 15. Remembering these steps will help you handle most revenue recognition scenarios you'll encounter. If you found this breakdown helpful, don't forget to like, subscribe, and hit the bell icon for more accounting insights. Thanks for watching, and happy studying.